session today, it's really exciting for me. I've been very passionate about frictionless experience and digital retailing for the last 15 years in the industry. I'm with Inovatec Systems. We provide loan origination and loan management systems to the majority of the Canadian lenders in auto finance and help them improve their operations. And we have with me executives who represent some of that digital journey, and especially on the direct-to-consumer side. So I just want to start by maybe talking a little bit about what we've seen for the last few years as a change in the overall buying experience, and specifically switching from the online channel being a step in the process to the requirement to have a fully omnichannel experience and ability to switch from one to another channel, ability to, in the case of Clutch and others, to complete a fully digital end-to-end experience. So maybe, Dan, if you want to start us with, I know that you spent a lot of time in auto talking with the regulators, and tell us a little bit more how, if we have all of the legal and compliance background to support that fully digital end-to-end experience.
Yeah, I think I was here last year, and I think we continue to make some really good progress. It's been slow, but I think we're starting to get there. We talked last year, I think, or the year before, about digital signatures. I think that's largely resolved. At the end of the day, though, I think what we're trying to solve for, regardless of whether it's digital or not, I think a lot of the regulators right now or the regulator right now is thinking about online versus offline transactions. And what I always like to tell them is like, look, almost 100% of all transactions now are somewhat online, whether it's on the discovery side, whether it's on the research side, whether it's on the contact side. And so the question then is like, what percentage of the transaction can be fully digital? And at that point, it's really just about consumer experience. And I think that's what I want to emphasize here is that oftentimes lenders sometimes are solving for the dealership as opposed to the consumer. And what we think about is like, how do you make the consumer journey so super seamless? And if I had a dream or a vision, the vision would be for a consumer to come in, know exactly what they can afford, have the inventory sorted and organized in a way that they can see exactly what they would have to pay for those vehicles, and then pick that car, one-click finance, have that car directly delivered to their driveway, and that's it. Like the consumer right now, I think, has a really complicated journey when it comes to buying a car, and there's a lot of uncertainty in that process, and that's what we're trying to solve.
That's fantastic. And Kevin, can you maybe talk a little bit about that transparency in the experience as someone who is the president of an auto group, how that the hidden costs and fees, etc. If you can maybe elaborate on that.
Sure. I wouldn't say like a traditional auto group or a leasing company, and I was probably much more comfortable on the last panel since my history is financing and securitizing vehicles, not running a leasing company. But probably because of that, our experience is a little different at Auto One. We were used to the compliance requirements, and that's what we actively go after to ensure that every time we are doing a new lease, it works through the system, ticks all the boxes for all the funders. Part of that process for us over the last few years has become, with this technical journey we're all on, it's how do you place all of that in a pocket. And if we had open banking, it would certainly make life a lot easier, but most of the banks here don't want that. So we as a finance company have to work around that. Now, how do we get all that information? How do we package it all together? How do we make it super easy for the customer? Transparent. Well, we've developed, and it started doing it for our own purpose, is pulling in all the various parts of the puzzle from IDV to start with, through to pulling bank accounts so we get real live information. But we also want to make sure the customer isn't upset by any of that. It needs to be seamless. It needs to be perfectly calm under the underside, and that's sort of how we approached it. We've taken that internal requirement and finally decided to move it out externally, which of course requires a lot more work. But again, it's all about transparency and ease. And to Dan's point, it's like, you want one-click financing to be the same as a one-click auto purchase. Well, that doesn't exist. You know, and so for us, we're working away at that. We're hopefully going to launch something soon, our credit wheel, that will take care of that. You know, 4 or 5 pieces of information, and it'll just zap out an interest, a pre-qual on a lease, believe it or not. But all that said, you know, the customer, and this is the customer journey that we have to talk about. It's not a dealer, and it's not us. It's the customer, and they need to be comfortable with all of this. And you know, the easy thing to look for, sadly, is you know, in the UK, there's, you know, most people probably have read about this. There's been a huge lawsuit, a class action suit, that has found banks, finance companies, independents liable for hundreds of billions of pounds of fees for taking secret commissions, as they call it over there. You know, everybody here that works for a bank knows that we all do this the same way. That's how we get deals from dealers. They expect to get paid a fee, and that fee varies. Could be varied by interest rate, credit. We don't really know. But is that coming here for us? Is, you know, our customers looking at that activity of going to the dealer, sitting in front of the business manager, getting that loan approved, knowing that it's getting sent all over the place, but not knowing if he's getting the best rate. You know, he may be getting the worst rate, and probably is, because, you know, the bank that gets the highest rate pays the biggest fee. You know, that's just the way it is. So it's a little scary, and you know, for us, when we're, you know, we own our capital. You know, we're the dealer principal here, as it were. You know, we hold our paper. So do I want to wake up one morning and have a class action lawsuit laid on my head that says I owe tens of millions of dollars to people? Probably not. So, you know, that transparency has to work through the system. And that is the next step in our reality, is that the consumer has all the power, and they should, and they're going to be showing up saying, I'm not prepared to take that step at the business office. I'll do it myself. Thank you. And there we are.
Well, I think the good news is that most consumers, as long as the fees are laid out and transparent, they understand. And as long as you can explain it to them, I think there's a way for us to all make money and, you know, run profitable businesses, as long as you can be very transparent with the consumer.
Well, the problem is they're not.
No, exactly.
I mean,
No, exactly.
it would be nice to have a perfect world where they
No,
are.
exactly. I mean, even in our when we buy cars directly for consumers, we apply a 5% fee. It's right there, and
Right.
you know, sure, we get pushback on it, but you know, the fact that it's right there is a lot easier to deal with if it was hidden underneath, right?
Yeah,
So-
the song and dance once the car's been evaluated and
Right.
you know, you've gone through the whole process. But what's funny is I think, like, talking about consumer experience. So again, hi guys, Nick from Rome. One of the things that I learned, this was back when we were at Auto Trader, which was super interesting, or I was at Auto Trader. We're doing a try before you buy program. It was an extended test drive. And I almost messed up the first deal, which was super interesting. I almost put my foot in my mouth because the customer, I remember, we gave him the car for 48 hours to test drive. And I remember calling her and I said, how's everything going? She said, great, I'm ready to buy the car. I said, what are you talking? Whoa, don't say that. Oh, that's great, awesome. She was happy. She didn't fight over anything. She didn't fight over the trade, because we had been so transparent up front by just giving her the vehicle, which was super interesting. So just talking about like the transparency for a consumer, just giving them that experience first out, you know, assuming that takes place, like the funding, most of the best customers, I know this is kind of like a thing we say in automotive, but the best customers are happy to pay. Like, they don't shop you on price, and I'm not saying you gouge or you do anything, you know, malicious, but as long as you're transparent, like Dan, you're saying you bake a fee in of 5%. Well, it's better than going all the way to the end of the deal with the dealership and knowing, oh, by the way, sorry, we found one more scratch on your car, or this or that, or you renege right on that deal. And then in terms of financing, I think that's the biggest confusion. Like, when we see people's bureau, they're running around all over town, right? It's never a surprise, right? You see people getting hit at a bunch of different agencies, a bunch of different places and banks. And it's funny because every time they restart that process, it's just so yucky, right? And you know, being able to go down and just simplify it, at the end of the day, everybody is going to buy a car, right? When they're in that process, it's just a matter of when, right? And I think one of the big challenges that you know, if we're talking omnichannel, you guys can jump in. One of the big challenges I think a lot of this conversation focuses on with digital retail is everybody focuses on the lead, right? There's like 80% of that, whatever that below the iceberg, murky water, that's where all the magic happens, right? Where you build the trust with the consumer. And it's funny to me because all along that process, like if we're talking trade, you still have negative equity. You have conversations of refinancing. You have all these different conversations about, is it the right time to buy a car before you get to the dealership, right? And there's always a standoff of information. So I think that's it's a super important piece to consider, throughout that whole process. If you're just more transparent up front, we manage it through an extended test drive with Rome effectively, but not to take away from what you guys are talking about. It's just super, super interesting to just hear the dealer side of it. Is everybody awake yet, by the way? Who's actually like a dealer person? Raise your hand. Or okay, we got like 2%. Who's a bank finance person? Okay, a lot of you. So I'm just trying to figure out how to like temper my presentation for for what will make more sense.
Can we talk, Nick, a little bit about affordability and specifically in the cases where you have slightly different approach with accommodating the consumer, building the relationship, etc.?
Yeah, so interesting. So not sure if many of you know about Rome, but effectively, so I've been in the dealer side, automotive side for a while, but effectively at Rome, what's interesting, what we did is we started doing these long-term, rentals, car subscriptions, short-term leases, whatever the regulator wants to call us, right? And it's the over 30-day, under 12-month mark. What's very interesting, though, about that, when we're talking omnichannel, I think the challenge that most people get wrong is immediately going back to that, they focus on the deal, they focus on the sale, they focus on the lead gen, right? It's not, oh, the guy messaged me on WhatsApp, and now he's on email, now he's in the dealership. Omnichannel is more about the experience, and I hate using this word because it sounds so cliche, but the experience being there's a discovery process, there's a test drive process, right? There's a payment desking process, there's an ownership process. Like these are all fragmented experiences, which is funny because most digital retail just focuses on capturing the lead. Oh, I have a better widget, I can get you pre-approved, and this will convert at a way higher rate. Measuring this stuff for the past 10 years, lead to sale, you're still at 15% conversion for the most part. In metropolitan areas, if anybody's higher than that, they're lying or they're fudging their numbers. Challenge you guys. But it's funny because when you look at that math, all these new widgets, not actually making the consumer more excited to buy, right? No consumer, nobody's found the magic bullet. Nobody's buying at a higher rate. And I think that really comes down to the whole process itself. Like what we did at Rome, focusing on kind of accidentally, I'll be honest, the over 30-day mark. But the magic piece of information I can communicate is we found out that 50% of our users, when they leave, they go buy a car. And okay, cool. What car do they buy? Most of them down to the exact same color and trim and vehicle, down to the color, which shocked me. And that's kind of what we learned at Trader and we applied here. But that was really interesting to me. So yes, we prepackage everything. We prepackage the maintenance, the F&I process, the accident management, and people pay more of a payment. But they know they're paying now so they don't have to pay later with negative equity. And that's an interesting conversation because 25% of deals coming through these days have negative equity to some effect. And it's a surprise at the end because there's, bad trade value, the guy over-kilometered it, right? And these things, that is omnichannel, right, in my opinion. It's managing that experience kind of dynamically through the life of that customer. But it's interesting that we basically have accidentally created, one of the highest converting lead to sales I've ever seen, just again, accidentally, by managing that consumer expectation of saying, hey, you can just try the car, right? And then people, we refer them over to the dealerships. Oftentimes they want to buy their own vehicle. It's kind of exciting, right? So in terms of transparency, most people, if you're talking about that effect, funding and the finance portal and whatever makes it easier for dealers to get more gross or consumers, to increase their quality of the experience, at the end of the day, that's kind of what speaks the most. Is just make it easier for them during that ownership experience, and then everything comes full circle. Dan, you guys have done a great job at Clutch on the trade
I
value.
think you guys have done a great job as well, and I think the model exists, and I think it'll exist for a while for you guys because the buying experience has been so clunky.
Yeah.
And this creates transparency and ease and certainty around and peace of mind around what they're going to get, and so I think that the business works because of, frankly, the inefficiency that we have in this market.
Yeah, but you guys, credit to Clutch guys,
It's just a big bromance.
Yeah,
right now.
exactly. It's funny. I was saying,
Love you
Just
too.
the finance guy in between. Sorry.
Kevin's the one funding this conversation.
Move back.
Yeah, but it's interesting because what Clutch nailed and got right was the consumer confidence of just hey, here's your car value updated, and it blew my mind how most dealerships get sold on these lead gen tools. Here you can get your trade value applied, and then it's a one and done, and you never revisit that conversation. It's shocking to me because you have what is it? 70% of customers you guys see have a trade?
No, it's less than that. I think For us, it's closer probably to 25. It's a lot
Really?
of first-time car buyers.
So retail dealerships, what? It's maybe 65, 70, something like that. But what's interesting is that, on a dealership level, like they have 3 times the amount of opportunity, right? Because they have that customer database, you have the equity mining tools, you have all that, but it's rarely ever communicated properly. And the brand loyalty, I don't remember the recent number. I think it was like 8% from Google. Like brand loyalty is decreasing every year. And I don't think that's by accident. So obviously because consumers have more access to information, but also everybody's walking away with negative equity. Like why would you go back to the same guy who just burned you, right? And so what's interesting to me is you go wherever you're going to plant your feet, that car is the biggest leverage on that decision of like, how am I going to get rid of the old thing?
Yeah, our business, yes, it's only 25% trade, but all of the cars that we acquire in our inventory come directly from consumers. And your statistic of 25% having negative equity, it's quite close. It's actually 23% of folks.
Sorry.
You're off. So it's 23% of folks that have negative. And that number actually has gone up. Average negative equity was $5,000 last year. It's now $8,000 in negative equity.
F&I.
So it's a big number. And we're actually financing that because the number of times that consumers come into our locations or get car picked up, they're like, I don't have $8,000 to basically sell my car. And so we've had to figure out a solution to be able to solve that problem. And so I think there's like a holistic, on both sides of the deal, a holistic problem that, again, if you're consumer focused, you can actually solve these problems for the consumer in a really easy and seamless way.
Yeah. Are we making it easy for you, Bob?
Absolutely, absolutely. Kevin, question for you.
Thanks. We love you too, Kevin. We love you too.
Tell me a little bit more, talking about affordability, how that impacts consumer behavior online, shopping by payments versus shopping for a particular asset.
Well, I think it's come down to a lot of, a lot of people are just looking for the monthly payment, right? I mean, it's the end of the day. We're focused on a lease model, of course, which provides a lower monthly payment with residual protection. And then Nick's side of the, it's a spectrum, right? I mean, he's probably talking mostly subprime guys that are looking for short-term rental cars because they can't.
We have a lot of prime customers, which is interesting.
You have a lot of subprime customers. But it's like they're moving along the line, right? I mean, you also you provide insurance. I mean, it's a more seamless approach. But at the end of 6 months, 8 months of the year, or whatever, they're moving along because they've improved their credit or their insurance has got itself fixed, so they don't have to pay $1 million for insurance.
Yeah.
And that's all part of the spectrum. Is like that's a monthly shopper. They're looking at that monthly amount that they have to pay Rome or Curbo, and then move along, and then what can they afford next, and that's where more along the lines of we're coming in, right? And then if they're still not to the I don't want an 8-year loan on my back, I'd rather do something that's a little bit in between 3-4 year lease. Well, there's always somewhere and somebody to play in the field, and I guess we're all trying to fit ourselves in between and make sure that that's where we work. And that's for us, and then again, that just leads to how do you make that seamless? Leasing has generally been viewed as something for commercial. Sure, over half of our book is commercial, probably 70% of our book is commercial. But it continues to be more important for retail consumers. And because you have to deal with retail, OMVIC has done, sadly, a good job in Ontario. BC is a shit show for regulation for leases. You can see all kinds of layers of fees and deals, from a lease fee to a finance fee to they're not disclosed, they do different pricing. So, we can all be happy that we're here in Ontario and they do a pretty good job actually ensuring disclosure. But all that means is that we have to fit ourselves foursquare into that consumer mindset of transparency, disclosure, and it all builds out to how they get their monthly payment. So, at the end of the day, that's most people in the consumer side look for. It's monthly payment.
I have a question for you, Kevin.
I don't answer questions. I just prophesy.
One of the things that we've seen more interest in is leasing on pre-owned, like 1 or 2 year old units. Is that something you guys?
Well, that's almost all we do.
So why? But why do you think there isn't more of like a commercial industry appetite for that? Because it's like we can tell you firsthand.
Yeah, most people don't know.
What? But,
it's weird. I mean, I guess it's not weird. I mean, if you look at the flow of what's happened with leasing over the years, and I've been doing this for a very long time, sadly. way back, before the last recession and the depression, whatever we're calling it, leasing was something like, I don't know, 40-50% of every retail car was a lease.
Yeah.
Ford Credit had 2-year leases. GMAC had 3s. They're all over the board. They had high residuals and they had low rates, and you couldn't afford not to take one of those cars because you had zero risk. You dropped it off in 2 years, it was gone. If I were an analyst at a factory at Ford, I was like, well, how in the world would I ever price this? Because it's like the last car off the line is worth 90% to the bottom line. So they didn't care about losing $10,000 a car when they came back. Well, you get a financial crisis that everything blows up. They can't lease cars because it's all the lease securitization structures that blew up because of the residual risk, right? So that market just disappeared for everybody. They could not get money in order to securitize, get to the capital to continue to lease. You move forward, and what do? 8-year, 7-year loans. It's exactly the same thing. All they've done is take that residual risk, move it to the person,
Yeah.
and create a different problem now. $8,000 at the back end.
Yeah.
That's exactly what they've done, but it's not their problem.
Yeah.
Right? And so now that's moved away. So a lot of people that have over that time lost the fact that you can actually lease used cars.
Yeah, it's interesting too
There
because
you are.
that's a good answer. I was going to say most of the customers that we see, even professionally, what's interesting is they have, the companies have a certain budget. Hey, you can come in at $850 and you get whatever you want. So the guy who's looking at the brand new X3 is, sorry, you can't, right? But then there's a 2-year-old unit, right? It's 15-20% bought down. Now we can get into that car. So it's funny to me. I think that's a huge thing that's coming up. On the dealer world, it's still so badly acknowledged because there's an invisible line. It's almost like a shock collar, for retail versus fleet, like commercial versus not commercial. And retail guys are selling these used customers. And by accident, kind of, we discovered this at Rome. So many of these people, you start pulling the cord. Oh my gosh, you're a professional. Where do you work? Oh, how long have you been there? Oh, you're getting your car expensed. Oh, everybody at that company is getting their car expensed. And there's this invisible line, right? That, that customer walks into the dealership and they're treated as a retail customer, which they are, right? But like, Kevin, to your point, they're basically seeking the ideal path is these guys would be looking for a lease all day long, right? If it was properly communicated to them, because it's basically it's a corporate expense. It's a great customer. It's going to be low mileage for the most part, unless they're a sales guy. But that's a whole different conversation for some of those comp plans. But super interesting feedback.
Well, I mean, it's a CRA issue, right? It's I think 850 or 800 is the write-off amount.
Yeah.
That's why the number.
Yeah.
So.
Just wanted to ask a question about fraud in that digital environment. Do you find, and maybe that's from then, if you want to start it, do you find that it makes it more secure starting the journey online and basically completing all of that authentication?
100%. It's so much more secure. I mean, at some point we see the person, right? There's a physical good that we're selling. It's not a digital good. It's a physical good. So at some point there is some human interaction of delivering the car or picking up the car. But we can actually, when we ask for the photo ID and, it's like you move your face around and it takes like 7 pictures, and you can geolocate that to a specific location. If it's like in some field in the middle of nowhere, then you can be like, well, that seems weird.
2 a.m.
At 2 a.m. exactly.
Yeah, I've seen those.
Wearing no shirt.
We've bathroom ones that add credit immediately.
Right?
Secret knowledge.
Yeah. So I think one, that's certainly the case. 2, I mean, given what we can do with financial technology, you can look into people's effectively bank accounts to see the payment history and to see their financial history. You can do all of that at the click of a button. So the digital experience is so much more secure than a purely physical one. Absolutely.
Yeah, it's
100%. We're way more comfortable doing this. I mean, and we don't see some of our customers because they come through a dealer. It's docu-signed, and so you have to kind of trust the process. And you do get pictures like half-naked people. It's bizarre.
Yeah, those bad credit. It's a guarantee. If
Not a good thing. Not a good thing.
Yeah, so fun to take us off course. But yeah, if there's 2 shades of paint on the wall, stop right there, right? If there's drywall patching, you probably have an idea. But there's some interesting stuff that goes on.
Well, then the last one, Brian said, is a janitor buying a Ferrari and does he live in a whatever? And it's like, sure enough. I mean, part of the process is checking out on a purview. Do they own a house? If they want a Ferrari, they better own a house. If they're renting, they shouldn't really have a Ferrari in our viewpoint. And so you have to tick all of those boxes as you go through. And physically doing all of that just leads to error and time-consuming waste of time.
Yeah,
way better.
It's interesting too because when for all of our customers, we KYC them, so we pull a soft credit check. We see payment history, debt equity, as good as the soft check can get us. But you're effectively getting so much more information. Rewind back to me being at a dealership. Probably 90% of dealerships are still just hitting the driver's license on the photocopier, the piece of paper. Then you throw the 8.5 by 11 in the air, or you make a paper plane and hope it lands back on your desk. Like there's zero quality control on that. And I think what's interesting is you get so much additional information, not even to just protect you, but you can also use in that qualifying and sales process. Like what the person's, where they've been, right? Where they've been hitting their credit. If they're late on payment. You have an idea of what if there's collections or if they're a top class citizen. That's great. But it's funny because it's such a valuable tool to load in once, and then you can orchestrate like a better conversation for all parties. It doesn't matter, right? Whether it's good credit or bad credit, it just helps you steer the conversation in the right direction rather than somebody coming in on something that they can't afford, but you kind of are softly walking them down to show face, and you kind of land at a better conclusion rather than, oh, sorry, Mr. Customer, like we've wasted all of our time. Now we've bought you at this. This is the car we can put you into. So it's just inefficient, right?
Yeah, no, I mean, I agree with Mike on the previous panel. I think dealers have a responsibility to do their KYC, and I think being a digital player, it's just, I mean, again, over time, we've made our processes so robust where you can actually, it's very hard, and because we're online, we actually become a target for a lot of these folks that, steal a car and try to offload it onto our platform, and we've put in a bunch of fraud checks. Some of them are just very simple. If the car has the ownership hasn't flipped flipped in the last 30 days, right? Like, why are you selling a car right now? There's a lot of simple things. If you're 17 and you're trying to, and this has happened, we've actually run a couple of sting operations at our facility where police have come in and caught the first person trying to offload a stolen car to us.
Classic.
But no, there's a lot of things that we as dealerships can do to at least be the first line of defense for, I would say, 90% of the fraud that happens. And so it's a lot, again, the digital experience makes it a lot easier.
That's good. That's a great point. And on that, are you using soft pulls for some of those pre-quals early in the process, or?
Ours is automatic.
Okay.
Once the ID is checked, the pull it's a soft pull is done. I mean,
So ID verification and soft pull is a two-way authentication,
Automatic.
which meets the FinTrack requirements, which now are coming into effect as April. I mean, I think that's amazing. And just to summarize, I know that we have 2 minutes left. How the flow has changed, but the key is again trust with the client, transparency throughout the process, and ease of doing business. So no matter if you are starting with the trade-in online or you're starting with that engagement, payment-based, etc., that allows to help consumers, especially now this year, for those of you who were last week at AFSA and NADA, it was all about affordability and defaults at the same time. So there's a lot of challenges in the industry, but having some of those creative ways to solve for that, help the consumer and lower the payments is amazing. So thank you again for sharing some of your experience.
Thank you.
thank you.
Thank you.